Welcome back, everybody. How are you guys doing this Monday afternoon? My bad. 1:45 p.m. Eastern Time. If you're new to this channel or this part of my channel, we talk about stocks. We talk about stocks, the market, some a little bit about crypto. I'm your boy Jeremy Waller. What's up? What's up? So first of all, this part of my channel, we talk about the stocks, but from a beginner's point of view, right? So if you're looking to get into the stock market, and whether you're a beginner in your 18s, 19s, in your 30s, 40s, we make it really friendly in terms of the vocabulary, in terms of you not getting overwhelmed with the knowledge, with the numbers. So hence you see the portfolio. We started this portfolio from $1,000 and now it's about 10. The road is 15. But without further ado, first of all, let me say I'm not a financial certified advisor of any sort. I can't tell you what to buy, hold, or sell. What I can tell you is and show you is my experience in the stock market. I've been in the stock market since 2015. And you know what? We've been cooking, bro. Like the portfolios are cooking. And I wanted to start sharing a public portfolio because a lot of people year to date, they were telling me, can you share some, not like what do you do in the market. I would get in the Discord group, the WhatsApp group, chats from family, friends. And I said, you know what, I had this Robinhood portfolio. I'm not affiliated with Robinhood or anything. I refer these companies. All my links are below. The portfolios, the apps where my portfolios are, they're private and public. But I recommend Robinhood because I actually started using Robinhood back in the day when I moved to the US in 2019. So I'm originally from Dubai, and I moved to the US in 2019. So anyway, um, why I recommend Robinhood if you're in the US? I don't know if you can use it in Europe or whatever, or the rest of the world. I use it. It's really user friendly for me. If someone's starting fresh, again, do your own due diligence, your own DD, and see what's best for you. But this is what works when I actually show people or tell them how to buy and sell, how to invest recurring on Robinhood is math simple. All you need is in this part of the world, a social security and link a bank, and you can start making it happen, right? So without further ado, let's get into it. So like you can see, what I'm basically chatting today about is why I'm still buying the dips, not just in my private portfolio, but also in the public portfolio, right? Why I'm doing this. And the reason is why I'm doing this, you'll see, because, you know, with all the noise and with tech earnings and the dip, my strategy is buying the dip, right? Really clear. With these dips, I'm buying it. And the reason why is because I believe I've done my own DD with these companies like Microsoft, SOFI, Meta, Google. I'm a long term investor. I'm not here to gamble or, you know, buy, make a few bucks and get out. So what this portfolio is I'm trying to tell you why one needs to invest, why I'm choosing to invest in these companies, right? So let's get into it. So market pullback opportunities, short-term volatility and AI capex concerns have created favorable long-term entries. Exactly. Earnings, weak catalyst, Microsoft, SoFi, Meta, and Alphabet, which is Google, report critical earnings data. So the core strategy is accumulating high convention growth anchors, Microsoft, NVDA, Google, Meta, and price dips. Long-term horizon, structural AI expansion, cloud dominance, and digital banking secular tailwinds remain fully intact. So let's break this down into beginner kind of take on it, like layman terms, right? Now, if you just got into your investing, hats off to you, congrats. You're on the right track, in my opinion. Um, your money is making money for you while you sleep or whatever, right? So if you have a day job and you're pumping money, I'm looking at these companies and I'm pumping my money in them for a long term, right? So in the public portfolio, we'll get into it, how much is in these portfolios right now, right? And the reason that I'm doing this is because there are a couple of people who are still beginners who reach out to me in the community and they ask me, yo, why are you still buying this? And the reason I'm buying these companies are only because I've seen them go like tremendously. Like if you look at year to date, let me pull out some data one second. I'm trying to get Robinhood again. The thing is, when you iPhone mirror, it just logs out when you're not using it. So if you look, for example, like the first company, with let's look at Microsoft, right? So let's go back to the portfolio, and in the portfolio, let's pop up. Where is my, yeah, okay. So let's go and type Microsoft, right? And remember, guys, like this is for beginners. So let's go to YTD, which is year to date, and year to date, it's down 18%, almost 19, correct? Let's just look at it 1 year. Again, 23%. 5 years is still up 35%, right? But two, three, four, so skips on that. Now, the reason that I'm looking at this year to date 18%, I look at this as an opportunity. I know Microsoft isn't going anywhere. If you guys use Google Finance, like I've been showing you in the last couple of videos, it comes in really clutch. So please go and use Google Finance. Invest in you is the best investment, right? That's what I'm doing for myself. So I use Google Finance. I also use Tip Ranks. So Microsoft, our position is only 2.6 shares. Market value is about $1,000. We are not even down a percent. I look at these dips as opportunities to get into great companies that I believe in. I look at the PE ratio is 23.89 for a tech company. That's amazing in my opinion. Like I said, I can't advise you what to buy, hold, or sell, but I'm accumulating these companies, Microsoft, Google, Meta, for the reason that I can see they're going up. If you go max, it's 704 from day one, right? Like look at that candlestick. Every business or client I speak to, everyone is still using Microsoft Office, Outlook, PowerPoint, Excel. Of course, there are some people who obviously use Google Docs and everything, but people are still using their tools. Also, Azure is a big part of their business, the cloud service business, right? So I'm still accumulating Microsoft in these companies for the long term. For the long term, like if you look at the Robinhood, right? They have this analyst rating, which is basically, did I skip it? Give me a sec. Where they're saying it's going up to 600. We're now 300. Obviously, you got to take this with a pinch of salt. It's not going to go up to 600 tomorrow, day after, in a year. It could take longer. It could happen sooner. But if you look at all the details over here, the gross profit, the net income of this company, you get to see all these details right there and there. Like you just scroll down like a landing page of a website and you can see the details quarterly, annually, whatever you want to see it, right? Um, so like guys, I'm saying from a person who's just joining the investment, this portfolio was basically made by me to say that if I was 18, 19, or if I just started investing into the stock market, these are the companies I'm buying in this portfolio. So Microsoft being one of them, right? So let's go back into the presentation and see what's happening over there. So the top 5 dip picks, long-term thesis, DIP, relax. So obviously cloud and hyperscale, Microsoft, Google, that's what we talk about, like Azure, right? Azure and cloud, Google Cloud lead enterprise AI monetization, temporary capex sells off, offer pristine long-term accumulation zones before AI productivity revenue scale. Now, basically, what is capex? Capex is usually their spending. So these companies spending massively, into R&D, research and development, into all. So they're spending money like crazy amount. Like some of them are like 10 billion, 50 billion. Right? They're just going and more, right? So they're spending because they obviously see something that me can't see, right? Yes, I can find online what they're doing and everything, but at the end of the day, they're so much ahead of the game that they're making stuff happen. So I'm in this for the long term. Obviously, like I wish, let's look at Google right now. So how we just did with Microsoft. So if you look at, so I just pulled up Google, right? And just, alphabet class C and A, basically, if you buy class A, you can vote, right? Class A, you can't vote, but that's the only difference from my understanding, right? Now, let's look at the same thing year to date. These guys are up under 3%. 1 year. So the past year, if you got into Google Alphabet, you're 67% and some change up. 5 years, 136, max 1000%, right? And change. Now, we're just 2% up. We made $19 on that's it. We have only in this portfolio 2.8 shares. So we're still accumulating at these price points. I think we bought some this morning or earlier today, $100, right? At 329. So I have Google in my private portfolios. We got into probably So if you look at, we're in 26. So I got into Google 5 years ago. When I moved to the US, well, I moved in 2019. So yeah. So I got into about 134, 135, right? Right now it's 326. So just let's look at it like I've doubled my money, right? So this is what I'm saying. Like if I started again a portfolio in today's world, and I'm new to investing, I'm a baby, a beginner. This is the companies that I would invest in, right? And although they're spending massively today, like Google's 326 per share right now, their PE is 26, reasonable in my opinion. You have all the stats here. The analyst is still saying 433, a price point as an indication, right? Again, take this out a pinch of salt, right? So let's go back into the presentation. So yeah, semis and this. So basically, NVDA and Meta, right? Or even AMD is there, but we don't have AMD in the public portfolio. We have it in private portfolio. So NVIDIA remains the indispensable compute backbone for AI factories. Meta leverages open source Llama, LA Llama, and or whatever that is, and AI targeted. I mean, that's probably like LLM and stuff, as to drive industry leading margin expansion and user engagement. Right. So let's get into this later, but we'll look at NVIDIA and Meta now. So they're still NVIDIA is still the big dog, right? Still the big dog. And I feel like Meta, although TikTok is huge and I feel Meta still controls, like you got X, you've got Snapchat, you've got these other guys. Meta is the top dog as well. So NVIDIA and Meta from their own categories are top dogs, but they're kind of using each other in to grow because they're in a similar, like then they're using AI, they need semiconductors, so Meta's buying from them. NVIDIA needs companies like Meta to, to grow. So let's look at NVIDIA and Meta together. Let's start with NVIDIA. NVIDIA is falling. Now I going to accumulate in this portfolio. Anything below $200 is a buy for me in this portfolio, right? So right now, let's look at what we just did earlier. 3 months ago, 6.2. Year to date, 3.5. 1 year ago, 12%. I'm looking at these things, guys, if you want to look. 5 years ago, 918%. So if you got into 5 years ago, which we did when we moved to the US, we're cooking. And max is 25,000, which is ridiculous, in my opinion. That's crazy. Imagine you own NVIDIA, NVIDIA not just as a stock, as a company, and that's your growth. Awesome. So let's look at it right now. We're down, and you don't want to catch a falling knife because you don't know how far it's going to fall. We did first. Let's look at what the analysts are saying. It's going to go 280. We had 196. Pinch of salt. Look at all the other details. We bought nothing today, so I'm just going to buy in this portfolio. I'm going to add $40. That's our buying power right now. Guys, I can't tell you what to buy all the time. I'm just showing you what I'm doing, right? So I'm not a financial certified advisor of any sort. I'm just sharing what I'm doing in the market. So let's look at NVIDIA. That's what we just bought. So we only have 1.61 shares in this portfolio. We have a tiny amount, but like I said, this is a baby portfolio. So we're looking to grow. Now, usually I don't like to buy stuff when they're not in red. And what I mean by that, when it's not in red, like NVIDIA is in green because obviously, but I'm accumulating because I feel these price points are amazing. So I'm buying it, right? And the other one we were talking about was Meta. Let's look at Meta, how many shares we are in. First, let's look at this. 3 months ago, it's 11% and some change down. Year to date, about 10% and some change. 1 year, 5 years up 60%. Max is 1,000. So NVIDIA, obviously, from a growth perspective, is crazy. But I also like, we have about 1,400 in Meta. Average cost of 595. So it's technically down right now. It's 2 p.m. Eastern time. I might track this till the end of the day because it might fall and I might get in. Oh, look at the analyst, $850. Again, guys, take that with a pinch of salt, right? So again, everybody's on WhatsApp. Everybody's on. If you don't use WhatsApp, you're using Facebook. If you don't using Facebook, you're using Instagram. You literally, you know, It's like Google, right? We're just talking about Google, not talking about, I'm on YouTube, Alphabet, Google, Alphabet owns all this, right? YouTube's not going anywhere. I don't see Instagram and Meta and WhatsApp going anywhere. If anything, they're just going to be like more recurring revenues, subscription models, whatever, right? With more AI, but it's just going to capture. It's like an ecosystem. We're in it. We're tapped in it. So I'm in the long run formatted to make money, 0% sell. I'm not buying anything right now, although it's like still red. Like if this falls more, great, right? What is the next point of 540? So it's currently 59. So this is another indication like 540 on the top right over here. If you can see that, it says a low 540. So if it obviously drops, then I'll buy then. That's another point on the charts. 520, another point I'll get into. But if you don't own these companies, and if I was buying these companies today, I would start a position right now. That's what I would do, right? The last time we bought stock of this was 586. So we're currently 594. So if it goes to 560, 564, and these are things which is great, which like we don't learn these things in school, right? So I'm just learning with the charts. I'm not trading with my heart. I'm trading with the charts. So I'm looking and these companies, I know these companies because obviously I've been in these companies. I use the companies, the technology and everything, right? So yeah, Meta is cool. And again, if you want to follow me in IG, which is Meta, my link's below. I share my buy and sell eh, cost prices, whatever prices, seller prices, stocks that I'm getting into in my private portfolio. So if you guys want to link up, links below, right? Uh, so yeah, let's go back into the charts. Not in the charts, in the presentation. So fintech. Now fintech is a cool another option that I like in the public portfolio. Why? Because I buy companies like SOFI, I buy companies like American Express, and I buy companies like Robinhood. All doing different things, but all in the fintech, right? Who's the fintech disruptor? SoFi. SoFi continues rapid member growth and deposit expansion, diversification in for tech platform services and ad fee based products, positions it for multi year earnings, acceleration as interest rates stabilize, right? So I'm buying the dip, I'm accumulating. Let's go back to the portfolio and look at SoFi. All right, SoFi. And then we look at the other hood. So SoFi right now, 16.97. 3 months ago, down 8 point something percent. A year ago, 36% down. So great opportunity to start now. 1 year ago, 20%. 5 years. So if you check online about SoFi Bank and if you never used them, Forbes obviously says there's one of the biggest US banks right now, and they're not a traditional bank. And look at the charts, guys. Last time I showed you on Google Finance that how many members that Bank of America has, and I think about 70 to 75 million. These guys have already captured 15 to 16 million, right? Active, right? Members. So a lot of people who are new, like Gen Zs, millennials, whoever, they're moving into SoFi technologies, and obviously the next generation to come, because the old dinosaur banks, not that they're not great, but they're not as modern and forward in terms of not just the way the apps look, not just like what the apps can do. Like you can go to SoFi today, download the app, you can trade, you can invest, you can buy crypto. There's so many things, take a loan, and there's no physical branches, right? So we are buying SoFi, right? Let's look at our accumulation. It's only 398 in this portfolio, 23 shares. We are not down yet at this point where I want to buy some more. When's the last time that we bought some? And see, the analyst is saying 17, we're right there. 16. So we bought July 24th some stock, one share. So if it goes in red, I'll definitely add more. But obviously, we got into SoFi in my private portfolio. When I say we, it's like my wife and I, right? So I bought SoFi at $7 in a private portfolio. Now let's look at another fintech, American Express, 334. This baby portfolio doesn't even have a share, 279. So total return is only 4%. That's it. Our average cost is 319. It's currently 334. We did buy some stock today for some share of this company, $50 at 333. So currently 334. Analysts are saying what? 335. So we're waiting, bro, like on this. And that's a great thing, right? Just to tell you guys, the wifey and I, we both invest our money into the stock market for our money to make money. She also has her own apps. She has her own portfolios, which is trading in and investing in. When I say trading, investing, right? My bad. So she's doing that from her phone and her apps. Robinhood. Robinhood is down, right? And I like this company 520, not just because we're just using 81. So of course, if it's going to drop more, I'm going to accumulate more. I believe this company, in my from the homework and research I've done, it has room to grow. They're saying it's 52, the analyst. So let's see if it drops more below my average cost, I'll buy more. But these are the sectors that we are in at this point in time, right? In these with the Microsoft, the Googles, the NVDAs, the Metas, the SOFI. Now let's look at some stats, right? Microsoft ticker symbol MSFT. So if you guys want to buy stock, that's what you got to type in MSFT. Q4 earnings, July 29th. So that's what's the day today, 27th. So we're looking at Wednesday, right? $381. Analysts are saying 554 average, implied upside 45, right? So these are some stats, obviously, to look at, some metrics, some data that if you want to look at it, you know, NVIDIA, ticker symbol NVDA, Q2 earnings, August late, currently, well, the recent zone, right? Because right now it's 196, it's 208, analysts is saying 260, upside is 24% from this recent price. Alphabet, Google, Q2 post report dip. So recently they had their earnings, I think last week. Obviously they blew their revenue 82% up, mainly with to do with their cloud services and etc. But their capex spending is like out of this world. Like I think it's like 50 billion or something. So 300, don't quote me, look online, yeah? I'll look at it with you guys in a sec. 318 is the recent zone. Currently, what were they? Let me check again. Currently, Google was at 326. So it's higher than this. And they're saying it's 408 is upscale, 28%. Meta, ticker symbol META, Q2 earnings week, 595. Recent, this is, I think, where Meta is right now. When you look upscale, it's, wow, 33, 796. SOFI, SOFI, July 29th. Again, that's Wednesday, $16 and some change. That's where we're at. Upside average 22, 33%. Now, key stream takeaway, right? On the stream, so take away from this, the key one. Short-term noise surrounding near-term capital expenditure is creating attractive valuation entries across tier 1 secular leaders. That's what I'm saying, guys. Like, just let's pause there. Is that these companies that I'm investing in the public portfolio, in the private portfolios, if you just look at these names, these 5 companies, I'm in for the long term. What is the long term for me? I'm talking about nothing less than 4 years. Nothing less than 4 years from now. So I'm keep on accumulating these companies that get great price points. If they're falling, I'm buying it, right? I can't tell you what to buy or to sell, but I'm buying it. Strong balance sheets, cloud leadership, and expanding TAM support buying dips for long-term compound growth. Exactly, guys. Like I'm saying, these are the things that we keep on buying. Why? Because we believe these companies are gonna make us millions in the long term, right? If it's not millions, multi-millionaires. And that's what I believe. Honestly, like, believe this is the stock market can make a lot of people rich if you use it smartly, if you do your due diligence, your DDs, you do your research, you keep on cooking, you don't buy and sell, you don't panic sell, you actually hold great companies, you believe in them, you get on their earnings calls, you listen to them, everything's here. You can use their earning call. Don't get overwhelmed, right? When I started back in 2015, I got a bit overwhelmed. So I'm just sharing what my experiences, right? Just keep on making it happen, owning it, like I always say. On that note, guys, I wish everyone a great rest of the day. I'll see you guys tomorrow. One love. Peace.